Good morning, everyone. Andrew Casilius here, Marketing Manager at USAdvisors Insurance, and I want to welcome everybody to today's presentation on linked benefit alternatives to traditional LTC planning. Thank you, everyone, for joining and taking some time out of your busy schedule. Today we have Brian Tuber, specialist from Lincoln Financial on MoneyGuard, to give us a presentation on their new and redesigned hybrid LTC product. But before we get into the presentation, a couple of household items. First of all, I want to say a big thank you to all of the advisors that are currently working with USAdvisors Insurance. We had a tremendous finish to the end of the year, so I want to say a big thank you for the business. And those that have not given us a try yet, I invite you to do so. We are a solutions-based firm specializing in anything from life insurance, annuity, linked benefit products, LTC, and disability, as well as advanced markets. And really, we strive to be more than just a product vendor. And at this day and age, and especially when everything has been marginalized to just a product, a lot of advisors find that refreshing. We also are built by advisors for advisors, so we have a lot of experience when it comes to business planning, helping advisors with practice management, and also client segmentation. So you see a phone number on the screen. If you need any assistance with your cases, feel free to give us a call at 800-303-4977. And the reason we want to bring this topic to you of a hybrid LTC right now is because the risk is very real. Statistics say that over 70% of folks 65 and older will need long-term care, and the national average right now for private nursing home or private care is about $97,000 a year. So the risk is very real, and the options for traditional LTCI are dwindling. MedAmerica just recently announced an exit from LTC market. So really, these linked benefit solutions are becoming more and more popular among not only advisors but also among consumers because of a lot of features that Brian will touch on that they offer. So without further ado, I want to turn it over to Brian. And once again, thank you so much for joining us.
Hey, thank you, Andrew. And again, I want to reiterate what Andrew was just saying. It's very important for you guys to leverage Andrew. He's a great resource to have. I know I've been working with him for just about over 2 years now, so he's a great partner to work with. So please, again, leverage USAdvisors for anything that you need in terms of the hybrid long-term care space. So again, without further ado, I'd like to hop into it. My name's Brian Tuber. I am an internal specialist here with MoneyGuard. I've been here on the sales desk for just about over 2 years now. Wanted to hop in a little bit to, and it was great leverage from Andrew. Wanted to kind of talk about what the national average long-term care costs are currently out there. Again, everyone is definitely aware that expenses can increase considerably, especially if the client develops a health problem that requires long-term care. So here we just want to show you some basic overview of some of the different averages that are currently out there. As you can see, it costs just roughly shy of $98,000 for a private licensed nursing facility. Just about around $22 an hour for a certified in-home healthcare aide to come provide in-home services, and just roughly north of $4,000 is the average monthly rate for a private one-bedroom unit in an assisted living facility. Wanted to kind of direct the focus again on your own time. Lincoln actually just rolled out a new website that helps with the averages that are currently out there in your state, and particularly even drill down to in your area wherever you are currently living. So that website is called whatcarecost.com/Lincoln, and once you get to that website, there's going to be a sponsor code, and that sponsor code is LTC. So again, that website is whatcarecost.com/Lincoln, and the sponsor code is LTC. So on your free time, and we can definitely, if you have any questions about that, maybe we can schedule some time with Andrew to discuss that. But it's a great resource that we've been using here just about roughly for 2 months, and it's a new website that we've recently updated. So again, I want to focus on that. So In recent years, we've seen a definite shift from traditional long-term care to the hybrid long-term care space, and I just wanted to give you just a couple of reasons of why that particularly is. So, one of the big things is that some clients do not like the idea of a use it or lose it type product. It's much like car insurance that, and they're paying in premiums, and if they never need it, all is lost. Hybrid long-term care products are viewed as an asset, where traditional LTC products are now viewed as an expense. There's always that chance that a client's premium payments will increase, and there are zero guarantees with traditional long-term care. Most policies will have an elimination period, so before they can even tap into their long-term care benefits, they must first pay out of pocket for their expenses, as you can see, which we just talked about before, isn't really that cheap. It's getting very expensive continually paying premiums for traditional LTC, and lastly, some people just believe that they have enough to self-insure. So what I want to do a little bit is talk a little bit about what MoneyGuard 2 can do for your client. MoneyGuard 2 is a hybrid long-term care solution offering just a smarter way to self-insure. For the longest time, MoneyGuard has been hanging their hat on their 3-bucket story, or the 3 L's, liquidity, leverage, and legacy. The Live, Die, Quit product that we recently upgraded just a little bit more. So as you can see here, in the bucket 1, benefits, if they need benefits for long-term care, they get income tax-free reimbursements for qualified long-term care expenses. So for the lazy money that clients might have sitting on the sidelines, or for a client that might have a life insurance policy that they feel they don't need anymore and have different needs in life, we have the access to do a single premium with MoneyGuard, or more recently with our FlexPay story. The FlexPay story is now a sweet spot for MoneyGuard. They have the ability to fund premiums either between 2 and 10 years, and that's especially for the younger clients that we are currently marketing towards. And there's going to be a case study later in the presentation that talks a little bit more about that FlexPay solution. As you can see in bucket 2, if they never need any of the long-term care benefits, which would be great, it's not as though all is lost. There's going to be an income tax-free death benefit that's going to be provided to the beneficiary. Again, income tax-free. So if they never need any of the long-term care benefits, in one way or another, MoneyGuard is going to be paying out some sort of benefit. And bucket 3, as you can see, is the return of premium options that we now have to offer for MoneyGuard 2. So just to kind of talk a little bit more about this section, MoneyGuard 2 for the longest time, their story was that we were going to offer a full return of premium. So if the client were to put in a single premium, or if they were to put in a flexible premium, after a particular time, the client was able to get back the full return of premium. Now, we didn't get rid of that scenario. We did realize, though, that out of all MoneyGuard policies that were put in force, roughly only about 1 to 2% of policies were ever being used for that full return of premium liquidity. So we figured, why not give the clients the ability to leverage their premium to get them the most long-term care benefits. So if you look at option 1, or our base policy, you can see here that the client chooses is they're going to get back 80% of what they put in as a premium. So if they were to put in, say, a $50,000 single premium, or if they were to get a $50,000 flex pay, after all plan premiums are paid in, they have the option of returning 80%. Now what that does is it provides about a 10 to 15% bump in long-term care benefits versus option 2, which is our graded option, or our vested option. And again, that vested option is the one that I was talking about before, that the client does have access to a full return of premium if they choose to. Again, both great options, but we also wanted to give them the option to choose, what's more important to them. Is it the leverage that they can receive with option 1, or is it that liquidity feature that they get with option 2? Now, just to talk a little bit about the reimbursement process for MoneyGuard, we are a streamlined underwriting process. So what that means is, for MoneyGuard, once they apply, we don't require any paramedics, we don't require any APSs, we don't require any blood work, things like that, any urine tests. What we are is strictly just a phone call with a registered nurse, which takes about 45 minutes to an hour to conduct. Now, at the very end of the presentation, I'm sort of going to go over a little bit more in detail, what that entails, just our pre-qual our pre-qual tool that we use in order to make sure that the clients are going to be, a good fit for MoneyGuard, and also just what our PHI worksheet looks like to help them, prepare for that interview. But here are just some things that kind of help with the reimbursement process. How does one qualify for long-term care expenses? Being unable to perform 2 out of the 6 activities of daily living, or severe cognitive impairment. Again, these are just some things that we need that they go over in order to be qualified for LTC expenses. Now let's talk about a little bit about a case study that we were referring to just a little bit ago. Here we have Eric, who's a 40-year-old dentist. He's married, and he sees the need to help protect his family. Now he's currently working, so he sees that he's not going to be able to do a single premium, but he has disposable income that he could use in order to fund it over our max 10 pay. So you can see here his option for plan is going to be $5,000 a year for 10 years, which in total is going to be $50,000. Now you can see in bucket 1, the long-term care expenses that you see there. This is assuming at age 80. So again, this client's going to have a total of over $1 million in long-term care benefits at age 80. So that's over 40 years of the inflation built-in. Obviously, Eric's young enough where we can put that inflation on, which is in return another sweet spot for MoneyGuard. Not only is the FlexPay story a sweet spot for MoneyGuard, the basic return of premium, or that 80% I was talking about, but also our inflation options. We have the ability to tack on either a 3% or 5% inflation option, which is in return, again, going to be building year over year. So if they do ultimately go on claim, that inflation is still going to be growing at that 3% or 5% inflation. So you can see here, Eric has a total LTC bucket of just over $1 million of coverage. He has a death benefit, a minimum death benefit. If he never touches the long-term care, he has a death benefit of over $50,000, roughly close to $54,000, for which the beneficiary is then going to receive, income tax-free if he never needs any long-term care. And last but not least, if Eric decides, again, if he needs the liquidity or the money back that he put in at any point in time, he's going to get back 80%. I think Eric sees this policy as being something that he's never really going to touch the policy. It's more or less a peace of mind for him. So again, here's that 3-bucket story in a case study for a 40-year-old male. Actually, last year for year-to-date sales for the territory, 20% of the demographic was a young professionals demographic. The average age for a MoneyGuard policy, I believe in 2009, 2010, was actually age 64. I believe it's around 58 now, and a big reason for that is that we are now marketing to these young professionals. The clients that believed that long-term care really wasn't on their radar, it's now being put onto their radar because of the rising cost of long-term care every day. Wanted to talk a little bit about the, part of the MoneyGuard policy isn't just the benefits that they're receiving. It's also this Lincoln Concierge Care Coordination that we now have to offer, with every MoneyGuard policy. And what that means is that the Concierge Care Coordination is a service that we now offer that helps with identifying, in-home care services, assisted living facilities, nursing home facilities, before the client even goes on claim. Everyone who is associated with that policy, say, for example, if mom purchased a policy, husband has access to the concierge care, kids have access to this concierge care service coordination. It helps file a claim. It helps with resources in order to prepare before that event happens. And I think with that being said, it's a very added luxury with MoneyGuard having this concierge care coordination service, because again, it is a family event in terms of when someone does go on claim, and just being able to prepare before that happens is a big win. Now, I wanted to jump a little bit into, again, what I was talking about before with our underwriting guidelines. Now, here on the screen is just our pre-submission underwriting tool that we use prior to having the MoneyGuard conversation. I think when having the conversation, we would want to walk through this particular guide to make sure that MoneyGuard is going to be a great fit for your client. We find that roughly around 80% of people are approved for MoneyGuard if they walk through this tool and find out and make sure that everything they see here on this tool that they can check off. So for example, one of the big things that we do see a lot is, if someone has surgery scheduled or if someone's receiving joint injections for a particular injury that they might have. With those particular things, we want to make sure that none of that's happening right now. Just because it's going to be a postponement or a decline for MoneyGuard. So we just want to make sure that everything is intact, that they can mark off everything here and make sure that nothing's happening before we want to go through the MoneyGuard process. Last but not least, I wanted to talk a little bit about the personal history interview worksheet. So with this is something that we use to help with the process when it comes down to the phone interview. So as you can see here, we provide them with information that they're going to need for the phone interview. So it's going to be things such as who's going to be the owner of the MoneyGuard policy, who's going to be the beneficiary of the policy. So it's just things that they want to have access to prior to conducting that interview, just so they're not, running around trying to find that information. You can see here's some disability, questions. Is there any medications that they're currently taking? The last time they went to the doctor, what was the reason they went to the doctor? If they have any cancer history, what was that cancer history? When was it diagnosed? Things of that nature that I think, if they have all that information laid out to them, it's going to make the interview, that much smoother. Now, I wanted to give this opportunity to pass this along to my colleague Glenn Usher, who also works with me here at Lincoln. He works for our competitive services team. He specializes in MoneyGuard's competition in the LTC hybrid space, and also questions about traditional and things like that, life with LTC riders. So he just brings more around us, awareness surrounding all these products that are currently out there in the market. So I wanted to pass it over to Glenn to have him talk a little bit about what he does here with us here, what his team does, and just to kind of talk a little bit about the State Life product that is currently out there in the market with that second to die rider. So Glenn, without further ado, I'm just going to pass it over to you.
Brian, thanks so much. Yeah, I figured I'd spend a few minutes just kind of giving the high level about what my team does, how we kind of support Brian and support Lee. Brian talked about a lot of the resources that you have available with Lincoln through Lincoln's concierge care, through Lee, through Andrew, through USAdvisors. So there's a lot of resources available. My team is one of those resources. We work pretty much daily with Brian. Everything from marketplace analysis, identifying trends in the long-term care space, but the majority of what my team is doing is actual real-life case-by-case analysis where maybe Lincoln is coming up against some traditional long-term care policy, or Lincoln's coming up against a life with a rider, or like that state life policy. But what my team tries to do is take sort of an unbiased look and take the conversation a little bit more off of the spreadsheet as far as what you're putting into it and what you're getting out of it. But also, what exactly is the value of each of these policies? What's the value of doing business with a carrier like Lincoln or another one of those bigger carriers, especially when you're talking about these longer-term contracts where the client's likely going to hold it for 15, 20 years, and it's also going to be a living benefit, whereas it's not a one-and-done claim type process where it is going to be an ongoing process. So, what exactly is the value with each of those carriers? Now, in the last maybe 10 or so years, there's been an explosion in that long-term care marketplace. We talked about it at the top of the call as far as carriers exiting the long-term care market, MedAmerica being the most recent, but we've certainly seen a shift from those types of policies to the linked benefit policies like MoneyGuard and the life with long-term care riders. So what my team does is really just try to help identify, for every particular client, keeping in mind that every client's going to be a little bit different. They all have different needs, whether it's a death benefit need, a long-term care need. Everyone's looking to address some type of need. So a lot of what my team does is really from an educational standpoint and just outlining this is what A policy provides, this is what B policy provides, and then let you folks make that determination as far as which product's going to be the right type of product for that client, whether it's a traditional or a life with rider or a linked benefit policy like MoneyGuard. Now, once you kind of identify the type of product that you're looking at, whether it's traditional, linked benefit, or hybrid, there are a few different types of carriers in the space. The one that we've seen probably the most often as of late that is competing with Lincoln's MoneyGuard is the product that Brian mentioned, which is the State Life Asset Care suite of products. So if you're familiar with it,
Some of this is going to kind of be a little bit of a reiteration, but I'm just going to give a few quick bullets as far as where I see Lincoln's product being competitive in that space, and where I see State Life's product being competitive. The way that State Life's product is kind of structured, it's essentially two separate contracts in one. So you have your base contract, which would be your death benefit. Then you have your extension of benefits rider. And one of State Life's niches in the marketplace is that they're one of very few carriers that offer what's called a lifetime benefit. So with that lifetime benefit, it essentially ensures that if and once a client goes on claim, there is no maximum amount that they can pull out of a policy. They are going to be capped at a monthly benefit. So if they have, a $5,000 a month benefit payable for life, they will have access to that for as long as they need it. The other niche that they have in the marketplace is that they offer a joint policy. So two clients on the same policy. It's a survivorship, second to die policy, and we see that quite a bit. When you're looking to insure a husband and a wife. Now that sort of survivorship joint policy has its advantages in that you kind of share the cost. It is a survivorship, so you will typically, for the same two clients, the same premium, get a higher death benefit. But in certain cases, it works better. In certain cases, it doesn't necessarily work as well. Where I typically see Lincoln's product being competitive is for those younger age clients. So if it's a husband and wife or a couple buying a policy, maybe in their 40s, 50s, or early 60s, where you're not adding inflation coverage to it, and that's a point that I'll touch on in a moment. But for those types of policies, when the clients aren't going to be going on claim for maybe 15, 20 years, having that inflation benefit kind of build up, where at the point where they're going to be going on claim, that monthly benefit is going to grow a lot higher. With State Life's policy for a husband and wife, I see that being extremely competitive for older clients, maybe in their late 60s or early 70s. If it's a couple buying a policy, because they're going to be able to sort of share that cost as far as the cost of insurance on that death benefit portion. So you are going to get a higher benefit. But when you're looking at a two-policy approach versus a second to die survivorship policy approach, when you're looking at the traditional survivorship policies where there is no death benefit component, those are typically going to be a lot more competitive because you're insuring two clients, being able to sort of share that risk. If you're looking at just a pure life insurance sale, it certainly makes sense putting two clients on the same policy. But when you're looking at a linked benefit policy where there's sort of a death benefit component to it, there's a long-term care component to it, in a lot of cases, it does make sense to add two clients to the same policy. But in other scenarios, it does make sense to separate that out. And what I mean by that is, with a linked benefit policy, if your client's going on claim, with a two-policy approach like you would see with MoneyGuard, one client going on claim, they're going to be drawing from their own death benefit, their own benefits. It's going to have no impact to the other insured's benefits. So there is some inherent protection as far as if one client goes on claim, the other death benefit is going to be protected, whereas with State Life, either or client going on claim is going to be drawing from that same benefit pool. So you've essentially increased the likelihood of actually exhausting what that asset is, which in this case is that death benefit, because either or client going on claim is drawing from the same benefit, whereas with MoneyGuard, one client going on claim isn't going to impact that death benefit. So when you're looking at the likelihood of having a death benefit payout, could potentially be a little bit higher. The other advantage to that two-policy approach is if you're taking a look at, what hypothetical scenario might actually play out for these clients. Typically, it's husband and wife. The husband has a shorter life expectancy. The wife cares for that for their spouse for as long as they can. The first spouse passes away, and then that second insured is typically the one that ends up needing long-term care. With the two-policy approach versus one policy, with the two-policy approach, when that first insured passes away, there is going to be a death benefit payout to that surviving spouse, which can provide a lot of financial flexibility. Whereas if you're looking at that survivorship policy, it is a second to die. So once that first insured passes away, there is no sort of death benefit payout. It will be second to die whether or not that second client actually needs long-term care or passes away. But there are some subtle advantages of having two separate policies versus a joint survivorship policy, being in that the death benefits are going to be inherently protected, and then also the fact that they are paid out as each client passes away versus second to die. The other point I mentioned, of why I see Lincoln's policy being a little bit more competitive for those younger clients versus the older, is that the way that State Life's policy is structured, it typically it doesn't make sense to add inflation to what they call the base policy, so that death benefit, which are those benefits that you're going to be accessing, first when that client goes on claim. With Lincoln, our inflation coverage covers the entire benefit. There is no sort of waiting period or no benefit that you have to get through prior to that inflation kicking in. So that's just sort of one reason why, if you're looking at a younger couple where inflation might be important to them, that's typically where I see Lincoln's product being competitive. But from a State Life's perspective, I certainly see their product being competitive for those older clients in their late 60s or 70s, where it's two clients buying a policy. They like the idea of that lifetime benefit. The inflation component doesn't necessarily make a lot of sense for them because they're sort of approaching that age of where they might be going on claim. So from a very high level, there's obviously a lot of noise in the long-term care marketplace, whether it's carriers exiting or carriers entering, the types of products that are out there, the features that are available out there. So feel free to use Andrew, to use Brian, and to use my team as sort of a resource, not just necessarily from a competitive positioning standpoint, but also just from a marketplace standpoint. What's happening? What's going on out there? What does an indemnity payout versus a reimbursement payout? How exactly do you quantify that? What is the value there? And that's a lot of what my team does in a support role for Brian, for Lee, and for the MoneyGuard team. So I know that was kind of a lot of information. I know that Brian covered a lot, so I'm sure we probably have a lot of questions. So with that, Andrew, I'll turn it over to you for any closing comments, and then we can open it up for questions as well.
Thanks, Glenn. Really appreciate it. Good insight and competitive analysis. And we do have access to both State Life and Lincoln products, so we can take a look at both scenarios for you if you have a case that you'd like us to take a look at. But once again, just to kind of recap, with MoneyGuard 2 and its redesign and refresh for 2016, it really opens up a lot of sales right now for flex space, especially, as Brian alluded to, for younger professionals. With the inflation rider, guaranteed benefits, absolutely zero chance of the premiums going up, and the fact that somebody is going to get the benefit. Either the insured will receive LTC benefits, or upon death, beneficiary will receive a tax-free death benefit. This is really a great alternative to traditional LTCI policies. So with that, we'll unmute everyone right now. So if you have any questions, feel free to ask both Brian and Glenn. Otherwise, you can also type in your question in the text box below.
Andrew, this is Brian. What I will say about Glenn's team here, and one of the great things that they do provide, is again that situation where if you are running into a competitive situation with a State Life or with a Pac Life, nationwide, whatever it may be, Glenn's team here, they do a great job in really being unbiased when it comes to kind of looking at a side-by-side view of both illustrations, both competitive, situations that they're running into. Again, Glenn sort of already talked about it, but every client is different. So depending on what they're really looking for, they do a great job of breaking down, what the illustration looks like, what to be aware for, if there's an elimination period, is it an indemnity versus reimbursement? Is there a couples discount versus, smoker rates, whatever it may be. So they are really unbiased when it comes to breaking down the situation. So again, if you ever need anything like that, feel free to reach out to Andrew or us here at Lincoln to help with those situations. But, again, definitely utilize and leverage Andrew over at USAdvisors with anything that you need. They're a great partner to work with, and, looking forward to 2016 and further. So, again, thank you, Andrew, and I don't know if there's any questions. I kind of just hopped in there.
Hey, you guys did a great job, no questions, so kudos to you. But I would invite everyone after the call to either give me a call or send me an email, andrew@usadvisorsinsurance.com, and receive after call materials. We'll send you a sample annotated proposal on the 40-year-old client, as was mentioned on the presentation. We'll also send you a pre-qualification tool so you can go over that with your client to identify if your client is the right fit, as well as pre-approach materials that you can actually initiate some sort of marketing campaign with your existing or prospective clients to drive some traffic to your office. So we've got all that available at USAdvisors Insurance. Feel free to reach out. Again, the phone number is on the screen, 800-303-4977. And with that, I want to again thank everybody for their time and for the business. Have a great day. Take care.
Have a good one.